Hello guys, my name is Muhammad M Faridl, and I'm here and I'm gonna talk about briefly about Intermediate Accounting 2 introduced by Gunawan Wibisono. Wow, I'm here to discuss about the homework problems 10.2, and it is about acquisition and disposition of property, plant, and equipment. Before we go through the questions A and B, before we try to answer those questions, we're gonna go through each of the transactions made in 2010. And there are 6 transactions, and we're just gonna have to identify each of the transaction and classify each transaction they are um, whether they are belong whether they belong to land account, land improvement account, buildings account, or equipment account. The first one, I'm just gonna read it out loud. Um, a tract of land was acquired for 150,000 as a potential future building site. Well, as you can see, a tract of land uh, that is being acquired here by the Lobos company. It is being considered as a investment, in which investment has its own account, and it is separated from the other accounts. So it means it is um, a one of the account within statement of financial position, but it doesn't belong. It doesn't answer the question A. So the second one, just gonna read it. A planned facility consisting of land and building was acquired from Mendota Company in exchange for 20,000 shares of Lobos ordinary shares. On the acquisition date, Lobo shares had a closing market price of 37 per share on the national exchange. The planned facility was carried on Mendota's books at 110,000 for land and 320,000 for the building at the exchange date. Current current appraised values for the land and building respectively are 230,000 and 690,000. Well, we see um, I recognize the the book values are not supposed to help us to answer A, because the book values are just the amount as the amounts that were being used before Lobo company uh, Lobo company wanted to trade their shares, the 20,000 shares, with Mendoza's planned facility. So that means the book values are not included within the analysis. However, the computation of fair values for each land and building are being put into the land account and building account within the statement of financial position for each respective account. Um, and that's how I got the amounts. And this two are the fair values. And these are the price values given by the Mendoza's company. And so let's get through number 3. Items of machinery and equipment were purchased at a total cost of 400,000. Additional costs were incurred as follows. So that means other than 400,000, there are other costs that are being incurred, and there are freight and unloading costs, sales taxes, that's one of the costs, installation costs. See, right here. So they all add up to one account, which is machinery and equipment. I already wrote it down here, typed it down here. Machinery and equipment. Number four, um, expenditures totaling 95,000 were made for new parking lots, streets, and sidewalks at the corporation's various planned locations. These expenditures had an estimated useful life of 15 years. So it doesn't matter with whether how many years uh, is the estimated useful life is, because won't affect it won't affect the result of the it won't affect whether to put these expenditures within which account. For example, um, so here they said parking lots, streets, and sidewalks, and there are uh, land improvements. So it doesn't matter how long is the useful life. We're still gonna record the 95,000 uh, and record and put it into the analysis of land improvements. And for number 5 and 6, actually, I'm just gonna read it out loud. 5. A machine costing 80,000 on January 1st, 2002 was scrapped on June 30, 2010. Straight line depreciation has been recorded on the basis of a 10-year life with no residual values. Okay, here I counted them all, the entire cost and the loss after being depreciated, but which are not necessary to necessary getting the task done. Well, you see here for number 5 and 6, the only two things that mattered that are being put in to the analysis are just the costs. The cost of 80,000 for the loss on scrapping on machine of a machine, and the cost of 44,000 because we simply just ignore the accumulated depreciation because it is just asked by the by the book itself. Okay, the we have it all here now, 1 to 6. I'm just gonna try to answer A. I already typed them all actually. Each of the analysis for land improvements, buildings, and equipments and machinery. So for analysis of land, the initial balance is this, and it adds up by 185 because that's the fair value allocated to land, which is being mentioned earlier in the transaction number 2. Right here, the fair value allocated to land is 185,000, and it gets us to 485,000. That's the ending balance. Next, analysis of land improvements at the year of 2010. The initial balance is this, and I added this by this because these land improvements I got from the number 4 uh, transaction here, 95,000, and it adds up to this. Next one is the analysis of buildings for the year of 2010. Initial balance is this 1 million, and then here the difference between the analysis of land and buildings, the initial balance are for the buildings is being added by the fair value allocated to buildings from number 2 transaction right here, and that's not 185, that's 555. That gets us to 1,655,000. And the last one is the analysis of machinery and equipment. Um, so the initial balance at January 1st, 2010 is here, and I add this amount to the to to the sum of all the costs of new machinery and equipment uh, added, which is 459,000, and it gets us to this. However, that's not the end yet, because we still have to subtract this amount by uh, the cost of machines being disposed, since the machines are scrapped. So 80,000 and 44,000 add up together to 124, and then I simply um, subtract this by this, and the ending balance is this. So as you can see here, the 80, I don't include the accumulated depreciation within the analysis, because that's not necessary. Well, uh, let's get through B. So for B, which is the it asks us to list the items that were not used to determine the answer to A. So any items that are not being used to answer A. And I already mentioned all these earlier to you guys. That, for example, one, the tract of land that was acquired. That's not. It's not. Yes, it is an account for the statement of financial position, but it is not one of the accounts that are mentioned above. It has its own account, which is investment. So that's why number one is not being included within the analysis. So the second one is the book values. I already talked to you guys before that the book values actually are not being used within the exchange date that Lobos have in the transaction with Mendota. Well, these amounts actually could come from the Mendota's previous client. So next, number 3 and 4 actually are the same. Although the total cost of machines being disposed is being used within the analysis of machinery and equipment, in order to deduct the cost of new machinery and equipment, um, the amount of money to depreciate the machine, also the losses actually on scrapping and selling the machines, are not necessarily need to be put in within the analysis of machinery and equipment, because the losses and the accumulated depreciations have their own place to go. For instance, the losses are being recorded within the income statement, and the accumulated depreciations of both 3 and 4 are being uh, recognized, are being deducted from, should be deducted from Lobo's statement of financial position. But as I said before, that the accumulated depreciation in this case can be ignored, because it's not asked by the book. So I think that is it. Thank you guys for paying attention to my course.